So examples on Boom 1000, we are talking about engulfing candles. Using engulfing candles to trade boom and crash. Now we want to show examples on Boom 1000. So bullish engulfing, buy here. Once this candle closes, you buy at that point. Then another one, bullish engulfing, once it closes, buy at this point. Bullish engulfing, once it closes, buy at that point, right? Bearish engulfing examples, once it closes, you buy here, you sell at this point, right? And then which other example can we see? We have this bearish engulfing, closes, you sell, right? Another one, bearish engulfing, closes, you sell at that point. Do we have any other examples? You can see we have, so bearish engulfing, closes, you sell here. Bearish engulfing, closes, you sell here. And this would probably hit your stop loss because your stops are above this previous high. And that is very much okay, because as a mature trader, you are using risk management to manage your trades. So bearish engulfing, you sell there. Bullish engulfing, you buy here, right? What other examples do we have? Bearish engulfing, you sell at the close of this candle, and stop loss hit, that is okay. You are using risk management, so you should be okay, right? So any other examples we can use? Look at this, bullish engulfing, you buy from this point. Bullish engulfing, buy here, your stop loss was hit, right? Because but with the risk management, you are sure you are being profitable. And then bearish engulfing, sell here, that is good. So those are the examples of using engulfing candles to take trades on boom and crash. We are in the 4-hour time frame. Assuming you want to combine with other methods or other technical analysis methods, you can use support resistance. Look at this resistance. The moment we hit that resistance, and then later on we have price coming back to it, right? Bearish engulfing, resistance, resistance, resistance. With the bearish engulfing, you sell. That is an example of resistance. Let's see if we have anything else on the with the support. You can look at this. We had support here. These are solid support zone, right? Support, and then price comes closing below it, faking a breakout, and then giving a bullish engulfing, you buy here, right? So these things, they work. So these are things worth looking at. You're looking for any other example of resistance and support. So we have solid resistance zone there. So price comes back, then gives us a bearish engulfing, you sell right here. Stop loss above, your stop loss will not be hit. But even if you had slightly lower stop loss, you have now another one, engulfing, you sell here, and that is your trade going lower. Yeah, so you could also choose to use fair value gaps. Fair value gaps like this, and this price coming into it, giving us a bearish engulfing, coming back again and going lower, coming back again and going lower. So this bearish fair value gap is holding value. The moment we have this bearish engulfing, you sell after it closes on this candle, and you ride on it going lower. So that is using fair value gaps. You can also use this fair value gap. Look at this bullish fair value gap, price failing to close below it, and then eventually it gives us a bullish engulfing, which gives us now something to work with, right? Bullish engulfing, stop loss below, and you buy. So those are fair value gaps. Let us use maybe other you can use relative strength index to determine where to buy and where to sell. So we are in the oversold region. I'm just showing you examples of how you can combine engulfing candles with other technical analysis tools and indicators. For example, now we have this RSI. In the oversold region, we have a bullish engulfing. You buy once it closes, right? So buy there. Let us see another example. Let us use this as an example. This is a bullish engulfing. RSI is in the oversold region. You buy. After you buy, your stop loss is hit, and that is okay. If it is okay, you should be able to be managing your risks well. And yeah, with risk management, this is not a big loss. So let us look for a bearish scenario where you would look for sells. So we are in the oversold. Do we have any bearish engulfing? Nothing yet, nothing yet, nothing yet. And then up to this point we have something. So price is coming off from an overbought region, and at this point candle closes, there's a bearish engulfing, you sell. Any other example? This is not one. Let's look for any other. Nothing there. Any other? This was good, right? So this is just an example using RSI as your indicator. Oversold region, bullish engulfing, you buy. After it closes, you buy from this candle here, and you take those. Any other example? This is not a bullish engulfing. Nothing, not significant, but even if you take it after it closes on this candle and you hit stop loss, with the risk management, this is just another day in business. So stop loss hit, right? So oversold region, bullish engulfing, you buy. Oversold region, bullish engulfing, you buy, right? So that is just using RSI as an added layer of confluence, right? Let us look at this. Bullish engulfing, prices in the oversold region, you buy at this point and ride on this wave, right? Let us look at this. Bearish engulfing, price was in the overbought and you sell at this point. So this is using RSI. We can use another indicator with a combination of engulfing candles. Let us use moving average in the 4-hour time frame, 200 length. So yep, so when the moving average price is above the moving average, you are looking for buys. So here price was above, you buy there. Bullish engulfing candle, buy there. Bullish engulfing candle, another buy. Another buy here, let me mark with an arrow. Another buy there. Bullish engulfing, a buy on this candle, right? So, and these are just a few examples. Bullish engulfing, you buy here and ride on that. Where else do we have any bullish engulfing? At this point, it is because price is above the moving average, and then you can try and look in places where price is below the moving average and you're looking for sales. All this move right here, price is below the moving average, so you're looking for sales when we see an engulfing candle. Engulfing candle, you sell here and ride on that wave. Still price is below, right, below the moving average. Any other engulfing candle, we have this one, price is below, and engulfing candle, bearish engulfing candle, you sell. This one, bearish engulfing candle, sell. At this point, any other that we cannot say, nothing. You can have this as an example as well, but now you have your stop loss hit, and that is just another day in trading where you hit a stop loss. But look at this, bearish engulfing, price is below the moving average, sell here. Any other engulfing, price is below the moving average, sell there. And then you look for other examples. Engulfing, this one is engulfing, sell here, sell here, right? You might hit a stop loss with this because price doesn't go far before it comes back to your stop loss. Even with that, we have this bearish engulfing, sell here, right, sell right here, and there you go. So this is the 4-hour time frame. These are swinging trades you can look at, but you can also go to the lower time frame and try to catch similar trades in the 1-hour time frame as well. And then you can also consider doing the 15-minute time frame. But with the 15 time frame, as I said in the previous video, for boom 1000 you're considering catching spikes, for crash 1000 you're considering catching spikes, because it doesn't make sense to have, actually there are no engulfing candles with the 15-minute time frame, because price naturally moves lower, so you want to catch bullish spikes in boom 1000. And when you see engulfing candles, you take those buys. For example, you have one here, you take another one here, and you take another one here, and you ride with this price up to this point, all the way up to this point. You can see price just kept going up higher and higher. And if you are late for those ones, take these buys, right? Bullish engulfing candle, take a buy there. Bullish engulfing candle, take a buy here, right? Bullish engulfing candle, take a buy here. So with this model, now we are catching spikes. And also you can combine with other models or other trading strategies to know when to get these areas of entry. You see this, buys, and this is just using engulfing candles as raw as they are. Bullish engulfing candle, you buy, and because price doesn't move far, maybe it hits your stop loss, and that is very much okay. Another day in trading. There's no 100% strategy that will give you wins every other time. So another example here, buy here, price doesn't move far, comes back and hits your stop loss, and that is very much okay. So yeah, so that is how you are going to use engulfing candles to trade crash 1000. I'll show other examples, and maybe in the near future I'll start using live examples where now we do live trading.